Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Morepen Labs, which in my opinion is a complete avoid even though it has run up a lot from 7 rupees. So let's understand why I believe that and let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Morepen Labs, has small request that kindly support me on Patreon. Once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list, and also a number of podcasts that I put up every day. For detailed market or company talk with the number of stocks if you are holding, you can directly email me and we can work things out from there. Now about Morepen Labs, established in 1987, it went public in 1993, exports to US, Europe and Russia. They deal in API formulation, home health, diagnostics, over-the-counter based drugs, etc. So there are many products that they make. They are not a pure API play. That one thing I want to make clear, but there are gamut of products that they are making on which they are making low to higher margins depending on the products that they are selling. Three US FDA approved manufacturing facilities in Himachal Pradesh that they have currently. If you look at the financials of the company, then the sales had dropped. This is Q4 FY20 versus FY19. Sales dropped by 5%. Profit was virtually flat. Promoter holding of only 34%. And return ratios are nothing great to write home about at 11 odd percent ROE and net profit margin of only 4%. When you consider and compare with other pharmaceutical companies, even small or mid cap pharma companies, these are very low numbers in terms of return ratios, and having no profitability growth is also a deterrent. If you look at mid cap pharma, there are many companies that are growing at 15-20% in this type of an environment. So why I believe it is an avoid. SEBI ban on further trading by promoters. So there was an issue about a year back, and that has led to a promoter being banned from trading more or buying more shares or selling more shares of the stock. It has, in my opinion, or whatever analysis I have done, and do your own analysis, it seems like that ban has not been lifted. There are better pharmaceutical plays available. So see, at 25, 27 rupees, 23 rupees, 24, whatever price it is trading at, don't look at the price per se. You need to understand that pharmaceutical is a huge space with API, with formulations, with diagnostic products, with cancer products, with R&D. There are companies like Syngene, etc., which are more into R&D, Biocon in that same sector, and larger players are gaining more traction because in the last 5 years they have done nothing. So these companies will continue to perform. So rather than looking at the stock price per se, one has to look at situations where, or companies where you can see more traction in numbers, better, you can say, realization of whatever products that they are making, and better margins to go with. And that is why I believe that larger mid caps or large caps would be a better play rather than going with something like a Morepen or the likes of that. There are other companies that for which a lot of queries come in for me. I believe you stick with the better players in any of the sectors, and you'll gain a lot of traction in your portfolio. It has already run up a lot from 7 odd rupees, 7 and a half rupees. It has already gone up to 25 and then have retraced to around 22 or so, whatever price it is trading at currently. So again, with weak fundamentals, not that strong as an Aurobindo, as an IPCA, DVs, Dr. Reddy's, etc. Uh, Larger investors will not look at such companies. So small investors would get into the company, prop up the price, and then sell it whenever there are some lower circuits, or there is some bad news, they will just get out, and the stock price will again come back to 12, 13 rupees, 18 rupees, or even lower. So that is the danger of investing in such companies. Yes, of course, you can always trade, and I'll talk about technicals after this. But trading is fine in these companies. But again, as I mentioned on many occasions, that these are the companies, or small cap companies are extremely dangerous because of these reasons, that you just cannot just look at the price per se and go ahead and buy. Remember that the numbers have always been deteriorating over the last 2 years or so, 2 3 years, at least 8 to 10 quarters. Numbers have always shaped downwards, and that has been the trend in most of the pharma companies. But in companies like Morepen Labs, it has accentuated over time, and that is why the stock went from something like 30 odd rupees, 36, 40, even I think 40, 45 rupees, all the way down to 7 rupees. So you need to understand why the fall happened, and whether the recovery will be as sharp as the fall happened about 3 4 years back. There is heavy competition in all those businesses that Morpen is trading at. API, whether you talk about formulation, there are many smaller players, even unlisted players, that are doing even better. So you have to understand that competition will lead to lower margins, lower profitability, and even losing out on businesses to other API players, to other, you can say, OTC business players. So all these things put together, either Morpen Labs go ahead and gain market share over time, and they'll of course come up in the news feed that they have gained market share. They'll come up with interviews, etc. Uh, Either they do that, or it is better to stay with larger mid caps. There's also low promoter holding, and they're not increasing their stake. Even before this ban that I was talking about, they were not doing it. Now it is extremely tough. 34 odd percent is not very low as promoter holding, but still it is lower than whichever other companies I'm talking about in the pharma sector. If you look at the technicals of the stock, then short-term support lies at around 21, 21 and a half. Long-term strong support is around 17. So if you're holding the stock slightly in profit, if you have bought it at 20, 22 rupees, you can keep a 17 rupees stop loss. If you're holding at very high levels, I would suggest that these are good levels to exit closer to 24, 25. I don't see the stock go beyond 30, 32. The major up move will begin over 32. The results have to be really good for the June quarter. The results are not out yet, so let's see how they go. And I think if you're holding it for, I mean, at 32, 35 rupees, then these are good levels to exit and buy into good quality large or mid cap companies. Numbers have remained subdued, and these June quarter numbers would be the trigger for the next move in the stock. So in my opinion, you need to avoid the stock at all cost, even at these prices. In fact, at these steep prices, it is an avoid for sure. Me may erode 80 90% of your wealth. There's no you can say stopping for it to go back to 7 8 rupees if things really go wrong in this sector. So you have to be with the leaders. Buy simpler businesses, even if you are not able to understand, say, pharma sector to the core. If you understand some businesses very very well, you buy into those companies, and there are better pharma plays available. Look for cash generating businesses, cash rich businesses. So this was my video on this pharma stock. Thanks a lot for watching.